Bank Negara's Monetary Policy Committee has raised the overnight policy rate by 25 basis points to 2.75%, its final hike for 2022. This was in line with median economist expectations on Bloomberg and marked the fourth consecutive 25 basis point hike this year, translating to a year-to-date increase of 100 basis points. This brought the ceiling and floor rates of the OPR's corridor to 3% and 2.5% respectively. BNM says the MPC decided to further adjust the degree of monetary accommodation against the backdrop of continued positive growth prospects for the Malaysian economy. The central bank says the adjustment would also preemptively manage the risk of excessive demand on price pressures, consistent with the recalibration of monetary policy settings that balances the risk to domestic inflation and sustainable growth. BNM points out that the MPC is not situated on any preset course, adding that monetary policy moves will continue to depend on the evolving conditions and implications on the overall outlook to domestic inflation and growth. The central bank says the latest indicators show that domestic economic activity strengthened further in the third quarter, driven primarily by robust domestic demand. Moving forward, BNM says global growth will continue to face headwinds from tighter financial conditions and elevated inflation in major economies and the domestic challenges in China, and remain subject to downside risks. This includes the escalation of geopolitical tensions, worsening of domestic headwinds in China, and potential energy rationing in Europe. Touching on inflation, BNM says Malaysia's headline inflation has likely peaked in the third quarter and is expected to moderate going forward, albeit at an elevated level. It says moving into 2023, headline and core inflation are expected to remain elevated amid both demand and cost pressures, but will remain partly contained by existing price controls, subsidies, and the remaining spare capacity in the economy. Globally, BNM says that because of the persistent inflationary pressures, a number of central banks are expected to continue raising interest rates. Particularly, continued aggressive adjustments in US interest rates have contributed to a persistently stronger US dollar environment. The central bank notes that this has resulted in higher volatility in financial markets, affecting both major and emerging market currencies, including the ringgit. However, BNM says this is not expected to derail Malaysia's growth. Proton Holdings recorded the highest sales volume of 115,366 units in the January to October 2022 period, surpassing the 114,708 units sold for the whole of 2021. This was due to local market demand and its export division. In a statement on Thursday, the national car maker said the 13,013 units in October boosted sales, making it the best sales result it's seen since 2014. Year-to-date sales increased by 33.6% for the first 10 months of this year, and Proton says that figure is expected to rise within the last 2 months of 2022. Compared with the rest of the market, Proton finished second in the sales table with an estimated market share of 21.1% in October 2022, while its year-to-date market share retreated slightly to 19.9%. Proton said overall total industry volume for October is estimated to exceed 60,000 units for a third consecutive month, as the Malaysian automotive market remains on target to break the record for total sales. Deputy CEO Roslan Abdullah said Proton's fourth consecutive year of volume growth coincides with the brand's entry into the sports utility vehicle market. The Proton X70's total volume now stands at 15,536 units, while overall Proton SUVs of 48,729 units have been delivered so far. Roslan added that the growth in Proton's export division in 2022 is in line with the car maker's intention to penetrate more overseas markets. MISC and its consortium partners have secured long-term shipping charter contracts from Qatar state-owned Qatar Energy. Qatar Energy is involved in exploration, production, refining, transport and storage. In a BOS filing, MISC said its consortium with Nippon Yusen Kabushiki Kaisha, Kawasaki Kisen Kaisha and China LNG Shipping Holdings had been awarded the time charter parties by Qatar Energy for 5 new-build LNG carriers. It said each consortium member will have equal equity interests of 25% in each awarded carrier. It said JV companies will be formed to manage the commercial operations of the LNG carriers, while a unit of MISC will be providing ship management services. The LNG carriers will be employed under long-term charters starting from 2025 onwards. Signature International claims that it is set to become ASEAN's largest kitchen and wardrobe company via acquisitions of Singapore-based Corten Interior Solutions and Ariel Interior Solutions for a total of 47.8 million Singapore dollars cash. In a boss filing, Signature said that under the conditional share sale agreement with Corten shareholder Bernard Lim Leng Fu, the company is set to acquire 1.5 million shares or 75% equity interest for 151.08 million ringgit. It also struck a deal with Lim and Chua Wei Peng to acquire the entire equity interests in Ariel for 9.4 million ringgit. It will be funded via a combination of internally generated funds and bank borrowings and is expected to be completed by the first half of 2023. Signature MD Chiao Hao Chun says the proposed acquisitions are in line with the company's objective of buying strategic stakes in profitable companies within the industry to secure strong and sustainable growth both domestically and internationally. He points out that Corten is Singapore's largest kitchen and wardrobe company with more than 50% market share of private residential property projects and has no less than 200 million Sing dollars in its order book as at end October. In addition, Corten guarantees a profit after tax of no less than 10 million Singapore dollars for the financial year ending February 28, 2023. Signature notes that the acquisitions are subject to its shareholders' approval at an EGM to be convened. Two former directors of Silverbird Group were convicted by the Sessions Court on November 2nd for knowingly allowing false statements to be furnished to Bursa Malaysia Securities. This is an offence under Section 369B of the Capital Markets and Services Act 2007. In a statement today, the Securities Commission said Silverbird's founder and former Group MD Dato' Jackson Tan Han Cook and former Group Executive Director Derek Ching Siu Cheong pleaded guilty to one charge each and were each sentenced to 1 day in jail and a fine of 500,000 ringgit or 50 months imprisonment in default. The duo were first charged on September 11, 2013. Tan was charged with 7 counts and Ching with 8 counts of furnishing false statements contained in Silverbird's unaudited financial results for the financial periods ended October 31st, 2010 and October 31st, 2011. Silverbird, which produced High Five sliced bread and Silverbird cakes, was delisted from Bursa Malaysia in 2014. It had ceased operations in June 2016 following a court order to vacate its premises. In February 2013, the confectioner announced a shocking 112 million ringgit hole in its finances, which was later revealed to be 297 million. After the financial irregularities were uncovered, Silverbird fell into PN17 status and the group subsequently removed Tan and Ching from its board.